Stocks in the U.S. plunged on Wednesday over fears of a possible recession. Earnings from retail giant Target were down more than 50% on supply chain costs. For the Dow, it was the biggest decline in almost 2 years, and the S&P 500 is on the brink of a bear market. Yeon-seung reports.
Investors worrying a recession is looming saw U.S. stocks fall on Wednesday by the most in 2 years. The Dow Jones Industrial Average shed more than 1,000 points for its worst session since June 2020. It was an even bigger decline on the S&P 500 at more than 4%, also its biggest decline in 2 years. And the more volatile Nasdaq with its tech shares saw a loss of 4.73%, its second worst decline of the year. Year to date, the S&P 500 is down more than 18%, on the brink of the 20% threshold that would mean a bear market. For the Nasdaq, once again, the drop is steeper. So far this year, it's lost more than a quarter of its value. Much of the sell-off was prompted by U.S. retailer Target reporting profits down more than 50% in the first quarter, largely due to higher fuel and freight costs. Shares of Target tumbled almost 25%.
The costs for Target are really increasing very fast. So because of this and because people are changing the way that they buy stuff, the costs for Target are going way up faster than their sales are going up.
Target's competitor Walmart, which on Tuesday cut its own growth forecast, saw its share price fall again on Wednesday. Soaring inflation and the Fed's efforts to tackle it with rate hikes are fueling fears of a recession. But some also see a recovery ahead and view this more as a chance to buy.
I do think we will see the averages higher than they are today. I think that at the moment we are testing that bottom and are probably in more of a attractive buying opportunity than anything else right now.
She also said that she thinks investors are overreacting as inflation naturally brings about higher costs. But for now, investors around the world are selling. The South Korean market closed lower on Thursday, but not nearly as much as the decline on Wall Street. The benchmark Kospi was down more than 1%, falling back below 2,600 points on selling by foreign investors. Yeon-seung, Arirang News.